हमारी इकोनॉमिक कुंडली में राहु काल तब चालू होता है जब ऑयल के दाम ऊपर जाते हैं. And undoubtedly this is Rahu Kalam as higher oil prices impact rupee rates, equity market, GDP growth. In your opinion, how much is the damage done? How much more we can bear the pain? And what steps government is taking or should be taking to minimize the impact?
We can only do sensitivities. We don't know what oil prices will be. Say, the markets, and everyone here, I think everyone in the oil markets, everyone in the financial markets thinks that this is not going to last because the outcome is so bad, it can't last. What you can do is sensitivities. So if you assume $100 per barrel oil for 1 year, you have a 2% of GDP impact. So effectively, think about it this way. If India is a black box, you were earlier paying something to get the energy in. Now you have to pay $80 billion extra. Someone has to pay for it. And when you pay for that, there is less money left to pay for other things, and therefore the economy shrinks, or at least doesn't grow that fast. But this is a one-time impact, because next year, so once the terms of trade have adjusted, then you start getting back close to your trend growth again. So this is a one-time adjustment. So unless we think that 70 going to 100 and 100 is going to go to 140 or 130, this is a one-time impact. There are other issues at play as well. I think the most important one is supply chain disruption. So the fact that methanol and a very large part of methanol production used to happen in West Asia, and or sulfur, helium, all of these things have been discussed. The fact that this starts to disrupt small items, the paint gun in a car shop uses LNG, and you don't have that, and therefore the car painting stops, and the whole supply chain then starts to buffer up. And then you start seeing order cancellations and so on and so forth. You have airlines, cancelling flights. So the Gulf Airlines, because they have dramatically reduced their flight schedules, they themselves have reduced oil demand by almost 1 million barrels a day. But that also means that there is a 15 to 17% decline in global airline capacity. That also means that hotels in Agra are seeing 50% cancellations of foreign tourist arrivals. To our good fortune, this is the end of the tourist season, but in areas where spring break, tourism, etc. was going to happen, at least in Asia, there are serious issues that are emerging. So there are second order effects, which are more what I would call supply chain issues. If you remember that small chip that was going into a tier 4 supplier that went into a car produced by Jaguar Land Rover, and the whole car couldn't be manufactured because that small chip was missing. Those kind of issues can also start hitting us. So that's the impact. I think in the near term, given that it is bad for us, it is terribly bad for the world. So if 4% of energy is taken out, it effectively means 4% of global GDP is taken out. You can do some substitution. You can do some efficiency gains, meaning you say, oh, kids, let's not send them to school for 6 months, let them do online schooling. But still, there is 2 to 3% of world GDP which gets affected. Everyone in the markets is feeling that, look, this can't last. It is so bad that it can't last. And so I think what Iran is trying to do is one fascinating book called Unrestricted Warfare by 2 Chinese colonels written in 1999. They call it the side principle, that if your opponent is very strong, and they are bombing you to smithereens, you hit them where they least expect to and where it hurts them most. And I think they realize that the impact is the worst on the financial markets. So it is only when, in fact, when just outside chatting with someone, and we were discussing that, oh, the bombing seemed to have started, and then we looked at the stock prices and the bond market, and there seems to be no sense of panic. So Trump is not going to back off when this happens. Trump is only going to back off when financial markets start throwing stress. From the government perspective, if this is a 2-month disruption, then I think what the government has done is the right thing, that do not allow excessive volatility to happen. So don't let the currency weaken a lot, because the currency will need to weaken. So if oil prices are going to be $100, then the INR may need to go to 98, 99. There's no rocket science, I mean, there's no objective science to this, it's a broad estimate. But if the oil prices are going to start recovering in 6 months, I mean coming down, then that adjustment is not necessary. So why take USD INR to 99 and then bring it back to 92, 91? So it makes sense to buffer it up. Same with fiscal interventions. So the simple way to think about it is that this is a step jump in energy prices. We net import 50%, nearly 50% of our dense energy in the form of oil, gas, fertilizer, edible oil, uranium, metallurgical coal. We put all that together, this is nearly 50% of our dense energy. So there is a one-time adjustment on growth, there is a one-time adjustment on inflation, there is a one-time adjustment on currency. That needs to happen. Once that is done, I don't think there is anything more that we need to fear or worry about. In fact, compared to any other time in our history, I think we are the best prepared that we can imagine. In fact, someone clearly much wiser than all of us, at least for me for sure, he was in the saddle when the 91 crisis happened. And he was telling someone, a very senior policymaker, you know, and this was well before the war hit. He said, the current phase reminds me of the 89 to 93 period. Things are going to get really choppy, so just hold tight. And he was right. I mean, of course, he was thinking Taiwan. I was telling him if something happens, it'll be Iran. But the fact that these things will happen, and frankly, from the government's perspective, it is extremely important to realize that this is not the end of it. So as Major Arya was saying, this is part of a grand war between US and China. So till the equations are settled, we should expect to see disruptions every 1 to 2 years.